It's a classic spend money to make money story for Akamai. Investors are currently wrestling with a fundamental shift. The company is successfully shedding its legacy CDN skin, but the cost of building an AI powered future is hitting the wallet harder than expected. Here is an expanded analysis of the Akamai Technologies AKAM situation. The strategic pivot from delivery to intelligence. Akamai is no longer just a content delivery network, it's repositioning as a massive distributed edge cloud. While the delivery segment, down 2% year over year, continues to drag on the top line, the growth engines are firing. Cloud Infrastructure Services, CIS, this is the star of the show. Accelerating from 39% to 45% growth, CIS is expected to hit nearly 50% growth in 2026. This validates their acquisition of Linode and their ability to compete with hyperscalers by offering lower latency distributed computing. Security dominance. Security now represents over half of total revenue. The 100% growth in API security is particularly vital, as APIs are the primary attack vector for modern AI applications. The AI catalyst, the $200 million inference bet. The announcement of a 4 year, $200 million AI inference cloud contract is the smoking gun for their new strategy. What it means, companies are moving from training AI, centralized, to running AI, decentralized. Akamai's global footprint is perfect for inference, the part where the AI actually answers user queries in real time. The catch? Revenue won't significantly impact the books until late 2026, creating a waiting period for investors. The financial friction, capex, and margins. This is where the cautious outlook stems from. To capture the AI market, Akamai has to build the physical infrastructure today. Here is a table. Metric 2026 projection, impact slash context, capex percent of revenue, 23 to 26%, significant jump, historically much lower. AI build out cost, $250 million, direct investment into the inference cloud. Hardware inflation, around $200 million. Rising memory prices are an external tax on their expansion. Operating margin, 26 to 28%, pressed lower by heavy infrastructure investment. The consensus. Management is willing to sacrifice short term free cash flow, FCF, and margins to secure a dominant position in edge AI. Investor sentiment. Bull case versus bear case. The bull case. Akamai is successfully pivoting into the two hottest sectors in tech, cybersecurity and AI infrastructure. If they hit that 50% CIS growth target, they will be valued as a high growth cloud play rather than a low multiple utility. The bear case. The delivery business is a melting ice cube, and the massive capex spike creates a valuation ceiling. Investors are worried that by the time the AI revenue ramps up in late 2026, the competitive landscape might be even more crowded, leaving Akamai with high overhead and thin margins.
Okay, so the stock is down 6.93%. This is Friday, the 20th of February 2026, pre-market session. Okay, let's see. Usually trades are low volumes. You can see here 3.3 million shares. It's quite a tiny volume. Yesterday it disclosed its earnings outcomes, and it lost some amount. It has recovered some ground. It has recovered some ground. Let's see what it lost. Yeah, this was today. Yeah, this was today. As we have as low as 9.93, 94.91. It has recovered somewhat. It has recovered somewhat. In the post-market session of yesterday, it dipped. Okay, so the extrapolation on this 4 hour chart is saying that we might get a small, it might recover somewhat towards the close of today's trading session, and then from the post-market session of today all the way towards the 26th of February pre-market session. We're looking at the contraction resuming. As a matter of fact, I think it's trying to reverse this extrapolation as you saw now. Yeah, this is the low it printed. This is that plunge. It plunged in the post market session when the earnings came out. Yeah, it plunged from let's see now, from 108 or thereabouts. It plunged from 109 and picked it up from bottom at 19. It says here 99, but we have as low as 95 on think of swim. Okay, so the 10 period moving average on this 4-hour chart is saying that momentum may continue to decay up to Tuesday the 24th, and then after that we might you might see it might pick up again. Okay, let's have a look at its daily chart, which hasn't reflected this weakness we are looking at right now. But it got it's I was actually extrapolating yesterday that it's going to be a down day today. Yeah, you can see here it's pointing down, yes, and that's what we have right now. But maybe not as. But yeah, today just say what's going to be down, and actually saying it may remain depressed all the way towards the 17th of March with volatility is indicating that a 40-day moving average, which is this one rising, might serve as a primary demand line, meaning that if it closes within one standard deviation of it, then demand might kick in. Okay, and on this daily chart, projections are saying 111.31. 119.12, 123.94, and stock is currently at 101 or thereabouts, 101.50 right now. Yeah. Okay, so on the price pressure momentum, the 10-day moving average. Okay, let's see how it's performing. I think it's rising at a pace of 1.7 before now, but by the time the market opens, this will give us a different reading altogether. So the stock is now at it's now just right where the moving average is. Yeah, just it's picking up support. That's where it is right now. It's you can say that it has got a support from that moving average for the 10-day moving average. So the moving average, I can't exactly say what it's going to be, but I don't think it would have changed. It would still remain, yes, it would still remain positive. I think it would still remain positive, yes. This is it would still be trending. I believe it would still be trending pretty much. I think, you know, pretty much. Okay, but in any case, it's indicating that volatility is what we should expect going all the way towards early February. Going by, you can see what we have here. This is the extrapolation of the moving average. You can see here, not stable at all. Not stable. Let's have a look at the 21-day moving average, which is the intermediate term moving average. Yeah, it's okay. It's some stability is expected up till a lot more stability surely up till the 12th of February. Okay, so what it's indicating that is that for now, yes, for now at least up till Thursday, more of a this is this any decline that might play out might affect the 10-day 21-day moving average, but after that it might remain stable at least between the 4th of March and the 13th of March. Some stability is expected there, but in the immediate term, volatility is expected as well. But this it's a lot more stable than the 10-day moving average. Let's have a look at the 21-day, the 40-day moving average. Okay, 40-day moving average. Okay, here volatility is not much stability. Yeah, momentum is expected to continue to decay. Yeah, it's expected to continue to decay. Yeah, okay. That's what is expected on the 40-day moving average. So no stability there as well. Let's have a look at the 200-day moving average, the underlying trend. So the 200-day moving average, this one, it's sloping bullishly upwards. Let's see what it's going to give us. Okay, yes, ascending, and momentum is expected to remain bullish. range. Yeah, so stable. Yeah, some stability is expected. In other words, anything we are expected to see, there's a chance that this moving average may indeed prevent curtail. It may indeed curtail the contraction that is impending, given by what we have here now. If this is anything to go by, if all things remain equal, then there's a chance that this may indeed be well. This may well be what may happen. Contraction may play out, but it may be curtailed, and then the uptrend may resume. So, underlying trend is expected to remain intact and continue to strengthen. Is expected to remain intact and may continue to strengthen. So, some of these projections we have here, 123 may well play out. 11131.31 may well play out. 111.12 they may well play out. Let's see now. 111.85 was what its close as of last week Friday. 111.85. Probability of that printing is not there. It's less than 50%. But even at that, there's still something there. There's still something there. Okay. So that's what's going on right now. Let's see how all of this will pan out. And thank you very much for watching this video.